I lost $975 trading a setup that I thought was perfect. Not because the market was random, not because my strategy was bad, but because I had broken one of the most important rules in day trading. On the low time frame, this trade, it didn't just look good, it looked inevitable to happen. And that's what made it so dangerous. Let me show you exactly how I got seduced by the market and why this trade failed. On the 15-minute chart, this was beautiful. We had a clean bullish reaction from equilibrium. Price broke structure to the upside. There was SMT. There was momentum. Everything said, this is a buy. Now, the way I trade is simple. The market moves in impulses and pullbacks. Big push, small retrace, then continuation. So what I want is a clear trend, a retracement into the midpoint, then a break of structure in the direction of that trend. And that's exactly what happened here. I drop down to the low time frame. Price pulls back, it hesitates. Then it breaks structure again from that level. That's my trigger. I enter with full size, $750 of risk. At first, it's fine. But then price starts forming this little triangle. Not bullish continuation, just consolidation. And that's when I get greedy. Instead of waiting, I add even more position to my trade and I tighten my stop loss. My logic was tight stop, huge upside. Same risk, way more reward. Smart, right? But that's when trading turns into gambling. Because now I'm not trading anymore. I'm hoping. And before I know it, price snaps down. My stop gets hit. Not minus 750, minus $975. And that's when I just sit there and be like, how did that setup fail? Because on the low time frame, this trade was a no-brainer. So I zoomed out and everything changed. On the daily chart, price has been stuck in a massive triangle range for over 2 months. No trend, no expansion, just compression. And then it hit me. The reason this trade failed had nothing to do with the low time frame. This is the rule I violated. The higher time frame trend dictates what the lower time frame is allowed to do. Let me say that again. The high time frame controls the low time frame. If the daily chart is ranging, the lower time frame will lie to you. It will show you structure, it will show you entries, it will show you perfection. But without higher time frame direction, these moves just don't follow through. They stall, they fake you out, they stop you out. So here's what I rebuilt into my trading. 1. If the high time frame is in a no trade zone, I don't care how good the low time frame looks, I don't touch it. 2. I don't add size inside consolidation. 3. My risk must match what my stop loss actually allows, not what I wish it allowed. Ranging markets don't reward skill, but they do, however, punish your impatience. And if you learn that early, you save yourself a lot of money. This trade made me realize the market didn't take away $975 from me. I gave it away the moment I ignored the bigger picture. So if there's anything you can take away from this video, let it be this.
No higher time frame trend means no trade.
So with that being said, if you want more real trade breakdowns like this, the good, the bad, and the expensive, then hit like, hit subscribe. I'll see you on the next one. Peace.